ladies and gentlemen, and welcome back. There has been a lot going on, and I'm going to get you up to date. Where to start? I guess before we get into inflation, before we get into interest rates, before we get into the Fed, let's start with some Las Vegas news. Let's talk Vegas. Currently, there are 11,232 homes on the market in Las Vegas. That's single-family homes, condos, townhomes, high-rise. 33 single-family residential homes sold in the last 30 days in Las Vegas. Something that I wanted to keep track of, even though I'm not sold on the 2008 comparison. It's something I want to keep track of regardless. There's 62 repos, 42 short sales, and 30 foreclosures on the market right now. And another bit of information that I want to start keeping track of as we go. There are 464 notices of default currently out there. I was trying to do this video for like the last week, and every time I start to do it, more madness was happening in the market, and I'm finally on here doing it. So it's my show has shifted over the day. Everything is happening so fast. That's what's crazy. Like everything that's been going on has been like at hyper speed. Okay, and let's get into what started all of this. Let's get into where I was going to do my video, but I ended up halting on it. Fed Chair Powell informed everyone this.
Today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And there will very likely be some softening of labor market conditions. Probably in the housing market have to go through a correction. The median for the year end suggests another 125 basis points in rate increases.
And as you can see, the stock market had an unfavorable reaction to this news. Americans' holdings of corporate equities and mutual funds are down $42 trillion since the start of the year. And yesterday we saw 30-year fixed-rate mortgages pop up to over 7%. This is the highest it's been since 2002. The payment on a $400,000 home at a 30-year fixed mortgage rate a year ago would have been $1,600 a month. Today, at these rates, a $400,000 home is going to cost you $2,600 a month. That's $1,000 more a month. This is also the biggest year-over-year mortgage rate hike since 1981.
So basically, the Federal Reserve's tool to stop inflation, raising interest rates a little bit along, is destroying the bond market, it's destroying the stock market, and it's destroying the housing market. It's gonna destroy employment. Definition of insanity. They keep doing the same thing over and over again, expecting a different result. Instead of retracting asset purchases, money printing asset purchases, and controlling government spending and fiscal policy, pulling it back, they keep doing the same thing over and over again, raising interest rates, and look at where we're at. Today's fiscal irresponsibility is powered by fiat money printing.
Here is a look at monthly inflation rates, and as you can see, the Fed started raising their rates in March of 2022, and we have yet to crack that 8%. And I thought this was a really cool chart to share. Well, cool, I don't know if cool is the right word. But in 25 years, we have yet to see a spike in inflation the way we have in the last 2 years. Now, this chart, I'm going to apologize in advance to all the people who hate it when we compare now to 2008. But I'm doing this anyway. If you line up the S&P 500 chart to the current S&P 500 chart, look at this. The white lines are now, and the yellow is 2008. And if we're following the same pattern, we aren't done. We still have a little ways to go down. Now, it's not to say that this is accurate and this is how it's going to happen and we're predicting the future, but it's looking pretty close to me.
So speaking of affordability, The income that you needed in Las Vegas to afford a home in 2020 was $51,553. In 2022, that number is now $106,652 to purchase an average home in Las Vegas. The trajectory of how fast this is happening is what is shocking most to me. It's happening so fast. Just like I said, in a week, we saw so much happen as far as price action goes. And don't dare compare this to 2008. Don't do it. This is nothing like 2008 because we don't have subprime loans. Well, okay. Don't compare it to 2008. Let's not do that at all. Let's compare it to the 1970s energy crisis. Let's compare it to the 2000 tech bubble that is looking pretty similar as well if you look at those charts. And World War II, look at the debt-to-income ratio in the World War II era. And the pandemic of 1910, there's another one for you. And the yield curve control and the money printing of the 1940s. So right now, my point is there's a lot going on in all markets that don't look good. And I say this like every episode, the Michael Burry quote of this is a bubble, this is a speculative bubble of all time, the biggest speculative bubble of all time in all things. Sorry, I butchered that this time, but you get the point. That's what it is. It's across the board, and it starts in the debt market. And we saw the 10-year yield skyrocket yesterday. It actually came down today, and it chilled out a little bit, which was favorable because we also saw that Great Britain, the Central Bank of Great Britain, they're going to be injecting quantitative easing right back into their system, which has actually slowed the market down a little bit. It makes me crazy though, because that's inflationary. It's inflationary.
And this, ladies and gentlemen, is the first time that the 10-year yield has risen to 4% since 2010. The drop to 3.72 was very favorable, but that climb to 4% was the fastest it's climbed at that pace in 40 years.
And this is hot off the presses. Nevada ranks last in the country for number of affordable and available rentals. So when asked the question, should I buy or rent right now? Well, first of all, I'm not a financial advisor. Okay? I know I'm on here talking about finance, I'm talking about the market, I'm informing you, but I am not a financial advisor. And I think that most people need to defer to their financial advisors, CPAs, when getting ready to purchase a home, because you need to find out if your affordability is on par with purchasing a home right now. Right now, we have a few things going against us. We have these high interest rates. We still are at a 450 median home price in Las Vegas, so it hasn't completely gone down, but we are getting into a space where you can negotiate deals and things are going to drop. And then we have rental prices so high. So you're weighing, and also I don't want to see us become a nation of renters. I don't want to see us shift into this globalization mentality of you will have nothing and be happy. I'm not okay with that. So the American dream is to own and buy a home. And that's why I'm in real estate and that's why I'm here. But at the same time, I can't prescribe to the idea of every time's a good time to buy for somebody, because those are the kind of mentalities that can lead us down a very dark road if people can't make their mortgage payments every month. So I think it's time to really be wise. I think it's really time for people to start saving their money, though I'm not a financial advisor, but I feel like saying save your money isn't bad. So thank you guys for tuning in again. I'm going to keep you updated. I'll try to get these out more often than not. Don't forget to like and subscribe, and I love you all. Stay well.